Hello, welcome back. This week we are going to be discussing the 1958 Berkshire Hathaway letters to shareholders. So, just to recap,
Mm.
we have it's still a private partnership. It hasn't gone public, or it's not a publicly traded stock. It's just family members and a bunch of people together. And now we get to deep dive into what's going on in 1958, the second letter that's publicly available. So let's get right into it. Okay, let
Yes.
me
So
share my screen.
excited.
Yeah. By the way, my host, my co host, the wonderful, very good looking Prab, and with
Yo.
me, Avinash. That's right.
We're
Now
we're
let's.
we're much cooler than we look.
Okay, let's get right into it. Let me know if you can see this.
Oh, I see it.
Okay,
Buffett is
so
still younger than we are. Oh my
Buffett,
god.
28. He's killing it already. He
I
has a
wanna
partnership,
throw
a
up.
lot of money. I know. It's incredible because he's already got a lot of money from a lot of people that he knows. So
That's
pretty
true.
great at 28. Already a good stellar record. 1958. What's going on? So there's Japan is fully independent from the American invasion, like we covered last time. 1951. The point contact germanium transistor and the MOSFET came in the late 1950s. We had the polio vaccination,
Well, I'm
and
gonna I'm gonna I'm
also
gonna take a random tangent. I didn't
yeah.
know America actually occupied
I
Japan.
didn't either. I did not know that
I
either.
mean, I thought
Yeah.
we bombed them and we were like, okay, figure it out. Like leave us alone. Just like we don't want your no now. Radiation, full of radiation country.
Yeah.
Like,
Yeah.
and
Y- You
and
know,
and there's a
yeah.
YouTube channel, Asianometry or whatever. I mean,
Uh-huh.
incredible. I mean, I love that channel on YouTube. And they just
Ah.
did one where it was like history of Japan,
Mm-hmm.
how it's kind of swung from state owned everything to big corporation being created, like privatization, and then kind of went back to kind of state power. So like
Oh,
late
interesting.
1800s,
Uh-huh.
the government was super powerful, owned everything, but
Mm.
it became stale. Like
Mm.
how bureaucracy, things weren't growing,
Mm.
and I think then they privatized everything, and then you have all these big companies that emerged. Mitsubishi. This is all early 1900s, like when IBM was started, World War One
Mm.
era, and
Mm.
there's a Sumo Soto, I think, which I probably mispronounced it, but it's still a supplier for like nickel or cobalt, and I mean Tesla is one of uses that as a supplier.
Mm.
All these big companies were created, and that I think
Interesting.
because of their like I mean they were monopolies, right? They didn't let other
Mm.
companies survive,
Mm-hmm.
and as part of their existence and profiteering missions,
Mm-hmm.
they invaded like Russia and Taiwan. I mean that's how Taiwan was invaded by Japan for the longest time.
Mm.
And then of
Interesting.
course that grew and grew and grew, and then ultimately these kind of profit seeking I think ethos of the country resulted in 1945 and the World War II, like the 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 big motivations behind Japan.
Yeah.
And and then of course the government was like, okay, enough of these big corporations, and they were already kind of decline, and they
Mm.
reorganized, and then they became, and they allowed new things to emerge, like what China's
Mm.
trying to do now.
Mm.
And that's how Honda, Toyota started, and then
Wow.
blew up. Like I mean, incredible export businesses in the 70s, 80s, to the
That
point
is
that
so interesting.
Japan had that huge bubble
Yeah.
market.
Oh, okay. Interesting. Yeah, because I know Japan comes back, right? Like in the late 90s, they're kind of a superpower again, and they're
Yeah,
they're really
yeah.
kicking butt. They think that it's going to be the next competitor to America and stuff. Wow. Okay. What a fascinating tangent. Okay.
But
Um,
incredible tangent, but still a tangent.
yeah.
Okay, back to
Yeah. Very interesting. Okay, so particularly in 1958, although globally that stuff is happening, particularly in 1958. So this is year two of President Dwight D. Eisenhower, and in April, unemployment in Detroit reaches 20%, making the height of the recession in 1958
there was a
in the
recession in
United States.
1958. But
Yeah, I didn't know this. I really didn't know this. It was so interesting.
didn't they have like
So
cars and stuff in Detroit? I thought that Detroit was the place to be, hanging out and making it Fords
yeah,
and GM cars and
yeah. And get this, later on, I'll show you exactly why I think there could be a recession, and especially Detroit being hit hard. Um,
you
but
always hear about those classic Mustangs. I think they're in the
yeah.
'60s, like 1967 model
Oh, okay. That's still coming up. Yeah.
So
Oh, I
maybe
wonder
in
what
'50s there wasn't. I mean, Ford was created, I think, in the 1920s with the
Okay.
Model T and stuff. But interesting
Yeah.
that the auto industry was in a slouch
It's kind of hit.
in
Yep.
the '50s, late '50s. Okay,
Yeah.
cool,
So
cool.
this will be an interesting read. See if Buffett picks up on any of
Yeah.
this recession stuff. In June 15th, Pizza Hut was founded. That was
Well, what
interesting.
about
1958.
Domino's? Well,
I
never
don't know.
mind.
I don't know. I don't know about Domino's, but that would have been a great investment. But I was surprised. Buffett was 28 when he had his first slice of Pizza Hut, probably. Um,
Wow, it's in
so,
Kansas. Well, he's in Nebraska. Okay, they're pretty
oh
much the
yeah, that's
same
true.
thing,
Yeah,
though.
and he barely goes out. So let
Yeah, I mean, he
maybe
sticks
he
to his
doesn't get credit.
McDonald's. So.
Yeah. In July, the plastic hula hoop was first marketed in the United
Oh my
States. That
god.
was interesting.
Last
Yeah.
year was frisbee, now it's the hula hoop. I mean,
Exactly. In July 10th, the first parking meters are installed in Britain.
oh
So
man, I hate
everyone,
those things.
yeah, I hate those things. I didn't know that Buffett lived in an era before parking meters. That must have been incredible.
Probably didn't have
Um,
cars to park.
yeah, yeah, that's absolutely right. Yeah, before they're not everyone could afford a car. But what's interesting about October 19th, 1958, is that in China, what we think now is like the Great China, there was a famine, one of the biggest famines, in fact, of a human kind of derived uh, famine. So really, it was caused by humans, and it's ridiculous. I didn't know about this. Maybe you did, Prab. The Great Chinese Famine, and it was caused by radical agricultural policies, social pressure, economic management, and natural disasters such as droughts and floods in farming regions. It killed 15 to 55 million people.
That is ridiculous. That is
That
a
is
lot of
insane.
people. Now, is
Yeah.
that before communism, after communism?
So I looked it up. This is Mao era. So I think that would have to be before or maybe during. I'm
I
not
think I
sure.
think that's when the Cultural Revolution was. Oh my God! Wikipedia has this article called "Mao's Great Famine from '58
Yeah.
to '62." I think I've heard about this. This
Uh,
is probably one of the strongest negative things about Mao is, and about
yeah.
communism. How communism continues to have
Yeah.
zero productivity and or low productivity and famine. I mean, even Russia, you hear about all these people who died of famine
Mm-hmm.
silently, where no news was reported. I mean,
Yeah, and the scariest thing is because of, I guess, just the control over the media, or maybe just word didn't spread. This was very hidden. You're absolutely right. No one really knew that this was happening, and you can see even the counting of the deaths, 15 million to 55 million. That's a very big, large span. But because you can't really count if you don't know if that there's an issue.
yeah.
So very, very interesting there. And then in December, the United States launches Core, the world's first communication satellite. So like communication
What?
system.
Oh,
Yeah,
the space race is starting.
that's right.
Oh
That's
my
right.
God.
Yeah, that's right. 1960s, the Cold War, the space. What's that war called?
Race?
Um, the space race. Yeah, that's right. Space race is
Race
starting.
to space?
It race to space with Russia and America. That's starting up.
I miss space
Um,
race.
Yeah. So people who were born in 1958 that we can kind of relate to, um, Ellen DeGeneres, which I had no idea about. Ice-T, also born, the very famous, now in the news, Alec Baldwin. Um, Prince, Kevin Bacon, not to be confused with his brother Crispy.
Oh yes, yes, crispy. It's
Crispy
I've
Bacon.
heard he's people like him a lot.
You see what I did there, Crispy Bacon? Madonna, as well as Neil deGrasse Tyson, was born also in 1958 when Buffett was 28. So now let's get right into the letters. Before we kind of get there, just to remind you again, this is kind of what people looked like in the 1950s. Now let's dive
I thought maybe we
straight.
should like dress up as the 50s, but
I'll be one of
that's
these guys.
yeah.
You can look sharp.
I'll be the
You want to wear the
ladies.
pink?
Yeah, those floral dresses and perfect hair. I mean, I already
Oh
have perfect
gosh.
hair, so just halfway there.
But yeah, this now we can jump into the letters
All right.
if you're cool with it. Um, oh, you know what? I need to load up the letters. Okay, here we go.
We will do 1958.
1958.
Okay. Okay. Here we go. You ready?
Yep.
All right. The general stock market in 1958. A friend who runs a medium sized investment trust recently wrote, a mercurial temperament, characteristic of the American people, produced a major transformation in 1958. And exuberant would be the proper word for the stock market, at least.
Mm.
I think this summarizes a change in psychology dominating the stock market in 1958 at both the amateur and professional levels. During the past year, almost any reason has been seized upon to justify investing in the market and investing in air quotes.
Hmm.
There are undoubtedly more mercurial tempered people in the stock market now than for a good many years. And the duration of their stay will be limited to how long they think profits can be made quickly and effortlessly. While it is impossible to determine how long they will continue to add numbers to their ranks and thereby stimulate rising prices, I believe it is valid to say that the longer their visit, the greater the reaction from it. Wow.
Interesting.
Dude,
I
he's.
feel like a bit of today is echoed in there, don't you?
I mean, I am terrible. I mean, I've been saying market's been overvalued for like the past 5, 6 years now. So
Yeah.
I don't know if I know anything. It's. But Buffett here, I mean, he's basically calling it out. I mean, starts off the letter by
Mm.
saying, we made a major transformation. I don't know. That sounds like there was positive corporate, earning activity, or maybe he's being
Hmm.
sarcastic. But the response, the stock market just went crazy, exuberant. And it's saying all these stupid people who were investing, quote unquote,
Hmm.
and they're just crazy. It's I don't know. I mean, crypto is probably the future, but it reminds me of the crypto people.
Yeah. Yeah. But you know what's also interesting here is that I thought we just heard that there was this recession going on. Why is he talking about people getting rich off the stock market?
Maybe it is a recession. Maybe nobody has jobs. Because 20%
Okay.
Detroit is jobless, right?
Yeah, that's right.
But maybe the stock market is still up for some reason.
Yeah, maybe it's a different sector. Maybe it was just a sex as like a sectorial impact. But yeah, interestingly, it seems like a lot of people are getting rich in 1958 in the stock market, and he thinks it's super bullish. And
I
um,
am trying to figure out if I can find the interest rates. Oh wow, interest rates are all through the 50s. Actually,
what's the interest rate in the 50s?
they were like 2.
Oh,
Actually, they didn't really go up like since that Great Depression. The interest rates have been
interesting.
like 3, 2 in the war. During the war they go down to like 1. World War II, I mean,
Mhm.
and then 2%. All through 50s are 2.5, and then in 60s they finally climb up to like 4.
Hmm.
Wow, they can remain low for a long time.
Yeah, surprising. But so maybe that is sectorial then. It impacted just the automotive sector in Detroit.
Perhaps,
But
perhaps it's just, but I mean, he's
it's
clearly
not that big.
thinking like
Yeah.
he's noticing a lot of froth in the market,
Yeah.
and enough to that he's commenting, but he's only commenting to his friends and families. He's like, I
Yeah.
think he can be more honest in these letters because they're not. I guess 100% public.
Yeah, and I kind of get the sense of that. Every time I'm reading this, I'm like, man, he's pretty putting himself out there. He's not very defensive.
This
He's
sounded
just
like
like,
Munger, like how Munger
yeah,
talks.
yeah,
Literally,
unfiltered.
yeah, unfiltered.
Yeah,
Hashtag.
love it.
Okay, third paragraph. I make no attempt to forecast the general market. Dude, you just did. My efforts are devoted to finding undervalued securities. However, I do believe that widespread public belief in the inevitability inevitability of profits from investment in stocks will lead to eventual trouble. God, I need to learn English. Should this
Mm,
occur, prices, but not intrinsic values, in my opinion, of course, of even undervalued securities can be expected to substantially affected. Okay. All he said was these fools are in the market and they think they have all this exuberance and they think stocks go up only and to the moon and
hmm
eventually they will come down and things we find are super super cheap right now, they may even be cheaper in the future.
Yeah,
So I mean, it is what it is.
yeah, yeah.
Okay, 1958. The results in 1958 is the next section. He writes, in my letter of last year, I wrote, our performance, relatively, is likely to be better in a bear market than in a bull market, so that deductions made from the above results should be tempered by the fact that it was the type of year when we should have done relatively well. In a year when the general market had a substantial advance, I would be well satisfied to match the advance of the averages. I feel like, I mean, he did say that,
Yeah,
but
he
I feel
did
like
talk about that.
he's maybe he's still okay if he doesn't match the market. Maybe he's fine with slight underperformance. No, I'm not sure.
Mm.
The latter sentence describes the type of year we had in 1958. Oh, and my forecast worked out. The Dow Jones Industrial Average advanced from 435 to 583, which, after adding back dividends of about 20 points, gave an overall gain of 38%.
Holy moly.
What a year! Dude, that
Incredible.
sounds like a recent year in the stock market.
Yeah. But very interesting. Okay, so that's actually just the Dow Jones Industrial Average. So
It's
really,
like
maybe
the big
Buffett
big
did
20 companies basically. It's like super S&P 500
okay, and so Buffett's. Are we expecting it to be higher here? 38.5%, more than that?
match. I mean, if you can match, that'd be great.
Yeah.
The five partnerships that operated throughout the entire year obtained results averaging slightly better than this.
Wow.
Based on market values at the end of both years, their gains ranged from 36.7 to 46.2.
Jeez.
How how is it doing? He
How
beat the.
is he doing that? I
Oh
don't
my
understand
god!
this guy.
Insider
So he's not
trading.
even. Let's kind of take a stab at what this guy owns because we don't know yet, right? Because it's private, which he
He's
doesn't
not gonna
disclose
tell
which
us.
companies. Yeah. So he does. We know he's on an insurance right now, or maybe he is because.
I don't think we're gonna be able to figure out what he owns. I mean,
Yeah.
he owns Geico. I think it's a private investment for him.
Yeah.
I do think he's just buying random small businesses. What he's owning doesn't really matter to him. Maybe he's buying cigar, but still,
Yeah.
he probably is
Yeah.
buying cigar, but I
Yeah.
mean, like dying. In today's, maybe it'll be the oil companies that, if electricity and the EV and batteries are the future, some things that doesn't have too bad of a future.
Yeah. Yeah.
But
Very
wow, I
interesting.
mean, he's not just keeping up. I mean, he's really keeping up with the market during these periods.
Yeah.
And the
Yeah.
market, I mean, market's so volatile. I mean, it was
Yeah.
down like what 30%. Now it's up 38%. I mean,
Mm-hmm. Yeah.
okay.
Incredible.
Considering the fact that a substantial portion of assets has been and still is invested in securities, which benefit very little from fast rising market, I believe these results are reasonably good. Oh, he's saying he has a lot of his money's in securities that do not benefit from these fast rising markets. How did he make so much
Hmm.
money then? Okay. I will continue to forecast that our results will be above average in a declining or level market, but it will be all we can do to keep pace with a rising market. Okay. Maybe because he just has high quality businesses? Is that possible?
Yeah, or maybe he got kind of lucky, to be honest. Like maybe he got, he wasn't invested in this the hit or maybe the supply chain wasn't impacted by the companies that that the depression, quote
Hmm.
unquote, hit, or the recession, quote unquote, hit. So the Detroit companies didn't really impact his businesses maybe at this time.
But he always hated the auto industry just because how competitive it was, and he thinks it's money losing. He compares it to airline, but he kept buying
Mm,
airlines. So
interesting. Yeah.
not
So
sure.
let's. So it seems like everything is kind of going well, and he's doing better than the average of what the Dow's doing. Okay.
Yeah, yeah, yeah. I mean, he thinks it's he doesn't think his companies are overvalued. I think his companies are actually thriving. So
Mm,
okay,
yeah.
typical situation. So that you may better understand our method of operation, I think it would be well to review a specific activity of 1958. Here we go. Here we
Here
go.
we go.
Last year, I referred to our largest holding, which comprised 10%, 20% of the assets of the various partnerships. I pointed out that it was to our interest to have the stock decline or remain relatively steady so that we could acquire an even larger position, and that for this reason, such a security would probably hold back our comparative performance in a bull market. Okay. This
Mm,
stock was the Commonwealth Trust Company of Union City, New Jersey.
interesting.
At
We
the
get a name
yeah,
finally.
and we'll probably take a break and Google what it was. At
Yeah.
the time we started to purchase the stock, it had an intrinsic value of about $125 per share, computed on a conservative basis. However, for good reasons, it paid no cash dividend at all despite earnings of about $10 per share, which was largely responsible for a depressed price of about $50 per share. So here we have a very well managed bank with
Mm,
substantial earnings power, selling at a large discount from intrinsic value. Management was friendly to us as new stockholders, and risk of any ultimate loss seemed minimal.
mm,
Commonwealth was 25% owned by a larger bank. Commonwealth had assets of about $50 million, about half the size of the First National in Omaha, which had desired a merger for many years. Such a merger was prevented for personal reasons, but there was evidence that this situation would not continue indefinitely. Thus, we had a combination of very strong defensive characteristics, good solid value building up at a satisfactory pace, and evidence to the effect that eventually this value would be unlocked, although it may be 1 year or 10 years. If the latter were true, the value would presumably have been built up to a considerably larger figure, say $250 per share.
wow, that's interesting. Let's take a little pause there.
Let's yeah.
So maybe first he was pointing out these three things, which made it a good company to invest in for him.
But let's go back. I mean, this is the company that's his number one idea. I mean, he's so bullish that he's like, I'm gonna continue to buy more. I'm gonna buy slowly, a little bit by little, but I'm gonna continue to buy more, and I wanted 20% of everything I own. I mean, that's a big position, right?
Mm,
20%,
mm,
and it's still a
yeah.
small company. This is not a big company. It has assets of $50 million. I mean,
Oh wow.
that's a bank. I
Yeah.
mean, he understands a bank that's has all assets included.
Yeah.
You know, $50 million, and 25% is owned by a larger bank. uh, and this Commonwealth Bank is half the size of the First National in Omaha. I'm assuming that may not be a huge bank, but
Yeah.
very small bank that is on the share price is low because they're not paying out dividends. 'Cause people like
Mm.
their dividends back then, and it
Mm-hmm.
was a good dividend. I mean,
ten
intrinsic
dollars a
value
share.
125 and $10. I mean, it's basically a 10%
Yeah.
dividend company.
Mm-hmm.
That already would have been an incredible business, but they're not giving out dividends, so people are upset
Yeah.
and not buying the stock and selling instead. And Buffett is like, well, he must think the bank managers is a decent capital allocator, that they're not
Mm-hmm.
throwing that $10 earning away.
Mm-hmm.
And so he says this. Uh, oh, and the Commonwealth had desired a merger for many years. So there's a corporate activity that's happening. I think, and his desire for merger is probably for the sake of growing.
Mm-hmm.
It such a merger was prepared for personal reasons. I guess personal reasons for management. Maybe they didn't
Yeah.
want to give it up. Maybe some half the management wanted to do it. Other half were like, maybe CEO was like, well, I don't want to lose my CEO position. I'm just speculating here.
Right. Right.
But there was evidence that this situation would not continue indefinitely. So they knew that eventually they will merge because such a profitable business, and they know. So there are
Mm-hmm.
three things with this business: very strong defensive characteristics. I mean, that's a moat,
Mm-hmm.
right? I mean, he's saying they have moat.
Yep.
Good, solid value building up at a satisfactory pace. He's saying they have good
Are
financial, they
growing.
have good earning power.
Right.
They
And they're growing.
and they're well, they're building up. Yeah,
Yeah.
they're
Solid
growing. They're
value
retaining
building
their
up.
earnings.
Mm-hmm.
Evidence to the effect that eventually this value will be unlocked, and eventually all this money that's building up, the intrinsic value that's so high,
Mm-hmm.
that it will be realized. I mean, this is a he thinks the stock is worth $125 per share. It's
Mm-hmm.
selling for $50 per share,
Yep.
and he thinks it could be worth $250 per share in ten
Yeah.
years.
So this is incredible for me because it's like he's speculating, of course, but
But it's
he's
giving us his
putting in
thesis, man.
a number. He's
Yeah.
giving us a number like, hey, look, I know my stuff, and I'm telling you, this is going to go to 350 a share, or
If
it
if
could.
if they don't, I mean, if they sit on this cash for 10 years,
Right.
I
I mean,
think because I mean
that's
he's no,
incredible.
but he's thinking of bouncing as soon as it jumps to 125. I mean, he's
Oh,
happy. His
he's
ideal
not.
situation is
Yeah, 125.
125. He's
Right.
buying it at 50. I
Yeah.
think he wants to get out at 125 if he can, but he's willing to wait 10 years, thinking that in 10 years he will actually get 250.
Yeah, but he's saying that the intrinsic value is 125 per share,
Correct.
but based off of these growth characteristics and modes
Yeah,
and
but
the
I don't think he's I don't think in this stage of his life he's looking for that long term. I think he's still looking for
okay.
those discounted things that as soon as they become intrinsic value, he's selling them and
Yeah.
moving on to other
Oh, I
things.
see. Okay, okay,
But his
interesting.
backup is, well, I'll just wait 10 years. That's his backup.
Yeah. Right. Okay. Okay. Interesting. Wow. So let's really think about that. If it's 125 right now, and it's I mean it's right now selling at 50 per share, right?
I mean, it's more
And
than 50% off, right? I mean, that's
yeah,
like,
more than 50% off. Yeah, 75%, right? It's
and
awesome.
more than 50% off for a company that's has good financials and strong moat. I
Yep.
guess maybe questionable management, because I don't know why they're retaining this stuff. I mean, what are they doing with it? They're not returning it to the the shareholder,
But that's good. Maybe they
but
invest it
maybe
back into
they're
the
they're
business
investing
for
it back
growth.
into the business. I
Yeah.
mean,
Yeah.
that's underlying
Yeah.
assumption, and that's fine. I guess that's fine. I don't understand banks, but yeah.
Yeah. Yeah, I thought this was interesting. Also before we go, what do you think about um, him investing in banks? Lee Lu's kind of he took a page out of that book, right? So he started investing, or right now he's invested in this Chinese bank. But do you think there's some inherent thing? Because he doesn't. I mean, he's invested before in banks, but do you
So I
think
mean,
that there's?
yeah, I mean, if you can understand banks, I think my personal philosophy is banks are very much like a tech company. I mean,
Mm,
there's really not that much operational cost. And when I say bank, I mean all these financial operations, banks, insurance, where, I mean, your product is a contract.
mm-hmm,
I mean, that's all it is. I'll give you money, you give me more money in return. That's a
mm-hmm,
bank.
mm-hmm,
Insurance. I give you money. If something goes bad, you give me more money.
mm.
I mean, that's it.
So a lot
You,
of
you
float
don't,
money
yeah, you
as
don't
well.
need capex. I mean,
Mm, mm,
maybe at that time you need to invest in offices,
mm-hmm,
but I mean that's nothing compared to what he gets himself into with textile later, as we'll see. I mean,
mm.
this. I mean, really, in the financial industry, if you know well,
Yeah.
it's high. It has high operational leverage. If it runs well, you will
Mm,
make a lot of money with low expenses.
mm, mm,
And I mean, obviously, there must be downfalls because all these banks, I mean, 2008, I mean, they get greedy, they give out loans, and
mm,
if too many people default, then you can go bankrupt.
mm-hmm.
Except for when you're too big to fail, then you
You
get
could
to,
save it.
yeah.
Yeah. But that's interesting. Yeah, you're absolutely right. Very little overhead. So how? I mean, maybe we don't have to get too deep into it, but how's he calculating intrinsic value then? If it's not these
I
buildings,
think
large
I mean
overheads.
ultimately, I mean Buffett was a true master of free cash flow. I mean
Mm,
he his owner earning formula is free cash flow. Like, what is the cash flow going to the business owner,
mm-hmm.
and what multiple is it selling at to that, and what's the
Yeah.
future cash flow. I mean, that kind of comes, bank
Mm,
is unlike a technology company in the sense that it probably has less disruption,
mm,
like
mm,
the idea of lending and investing and savings. I mean, you can't fundamentally change that.
mm. Yeah.
Maybe you can do that on the blockchain. I still don't understand how.
Mm-hmm.
Like, how do you bring? I mean, how you actually do that? Because ultimately, it's like, it's trust, and you need all this middle management. And, I mean, it's exist
Yeah.
for a reason. Maybe blockchain will figure out a way to get rid of the whole finance industry and automate it.
Mm,
But I mean, that's what a bank does. It's a connecting layer between people who save, who
mm,
you know create little CDs, the fixed deposits, or a savings account,
mm-hmm.
and then the bank takes their money and
Mm-hmm.
gives it to investors who want
Mm,
to own a business or buy a house, take a
mm.
loan, and it sits in the middle and eats the profit.
Yep.
And it's kind
Yep.
of like a built-in insurance company that
Mm,
it will absorb some losses for
mm.
the um, whole industry, and still be
Yeah.
profitable, and it
Yeah.
creates wealth. So it's, I mean,
Yeah.
that's good in that sense. It's when it gets greedy. I mean, that's where the issue is.
Yeah. Too much cash flow, or maybe yeah, too much risky lending.
Yeah,
Yep.
risky. When you let go of risk, then risk will screw you
Yeah. Okay.
over. That was my spiel for somebody who really don't understand
I
finance.
love that. That was more than what I know, so that was good. Uh-huh.
uh, Over a period of a year or so, we were successful in obtaining about 12% of the bank at a price averaging about $51 per share. Obviously, it was definitely to our advantage to have the stock remain dormant in price. This is beautiful. I mean, he does not care. It's not. I mean, we buy stock at times, and I mean, we look at prices like every day. Oh man, it's lower.
Yeah.
Oh
Why
God,
didn't? Yeah.
why did I do the right thing? What I was thinking? I should have stayed an index. I should have
Yeah.
bought Bitcoin. I should have bought Tesla.
Yeah.
I should have bought all the things that went up, and I should have avoided all the things that went down. I mean,
Hmm.
if only I could do that. And
Mm-hmm.
he's like,
Yeah.
I mean, he buys this thing thinking, well, kind of hope it goes lower so I can
Yeah.
buy more. I mean, like,
Yeah.
what an idiot.
That's great conviction. That's such great conviction. And you're
Yeah,
absolutely right. Like really, if you're sure about any stock that you buy, you should hope that it should go down so you can buy more. If
but yeah,
anything.
and you're right. I
Yeah.
mean, that emotion,
Yeah.
that attitude comes from conviction.
Yeah.
I mean, if you know something's worth something, I mean, it and doesn't matter. I mean, if it's something, like if I buy an iPhone, someone's selling an iPhone, which let's say costs probably 600, $700. If they're giving a
Hmm.
new iPhone for $100,
Hmm.
and you buy one, and then tomorrow's $50, I mean, like we understand iPhone as a society to the point that you will buy another at $50. You're not gonna be
Hmm.
like, oh shoot, I'm gonna sell my $100 iPhone at $50 now
Yeah.
because the today market is selling at lower price. I mean, no,
Hmm.
it's because we
Yeah.
understand that product so well, and Buffett understands his businesses that well.
Yeah. Yeah. Incredible.
Incredible. Oh, okay, okay. Uh, Obviously, it was
Oh,
definitely to our advantage to have the stock remain dormant in price. Our block of stock increased in value as
mhm,
its size grew.
mhm,
So it says he got more value as the size grew. I mean, which is
mhm.
important. That means if you know something's cheap, you have conviction, you need to buy a lot more. One or two
Yep.
percent is not creating value.
Mhm,
20% is creating value. 40% is
mhm.
creating value.
Yeah.
Particularly after we became the second largest stockholder with sufficient voting power to warrant consultation on any merger proposal. Oh,
Interesting.
God.
Wow. So he's gotten so much stake in it that he can just say, "Look, we go through with this merger, or we don't go through with
He's
it."
an activist investor, basically. He's bought it
Yeah.
and then he's like, well, merge so I can unlock my value and make them monies.
Yeah. My goodness, that's awesome. Is that where he's leaning toward right now? Can we tell if he's wanting that merger? He does, right? Because he just wants to leave it once it's merged and
Yeah.
bounce.
I mean, if
Yeah.
it means his money will be worth, his stocks will be worth more, then I don't know
Yeah.
why he would be like, no.
Yeah. Hmm.
Okay. And I like how he's disclosing all this.
Yeah. It's awesome.
Commonwealth only had about 300 stockholders and probably averaged 2 trades or so per month.
Mm.
So you can understand why I say that the activity of the stock market generally had very little effect on the price movement of some of our holdings. What?
How does he know that? How does he know that?
I don't know. Maybe the stock market, maybe the brokers knew, like,
Oh, okay.
it's just such a
Wow.
small, illiquid stock. Only 300 people own this stock, and it's trading twice a month.
That's so crazy. That's like every nanosecond now. That's so insane. How is that
Two
possible?
trades. Oh, no wonder he's like taking forever to buy this. He's like, I mean, he could
Yeah.
be like, I want to buy a lot of it right now, and people would flock, right? And people would like, fine,
Yeah.
if you pay me enough, I will let you buy.
This kind of makes me question, so what was it because it was such a diamond in the rough and no one really cared about the stock and there was very little
Something Buffett has
exchange?
said that you need to look at smaller companies. I mean, this is
Yeah.
this is kind of like the micro cap club,
Yeah.
where you look in obscure stocks where the big players are not gonna care
Yeah, that's right. So no one's really looking at this.
till it gets
Really?
merged till
Yeah.
it gets picked up by a bigger fish. Then the
Interesting.
value gain goes bloop.
Yeah, so maybe the takeaway is look for companies that are gonna get bought out by bigger companies, maybe?
That, but also look at smaller companies because
Yeah, when you
American
don't have a
market has
lot of
become
money.
very efficient.
Mm.
Or I guess efficiency implies on par value. I would
Mhm.
say it's definitely not undervalued.
Mhm.
It's sufficient to overvalued,
Mhm.
and maybe I don't know. Maybe microcap is not touched by that space. And there are not that many microcap stocks. I could be wrong.
Mm.
I mean, this is
Mm.
50 million back then. That's probably what, like, I mean, that inflation adjusted, maybe 100 million to $500 million company is what
Mhm.
would be equivalent today's with
Yeah.
that kind of purchasing power.
Yeah.
So, I mean, that's kind of a price criteria, sub $500 million companies.
Yeah. He finds really interesting as like potential 10 baggers or something.
Yeah,
Yeah.
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 It's so interesting. Like, all these numbers kind of, make sense. I mean,
Yeah. Yeah. Yeah.
it's very similar.
Yeah.
Okay, here we go. So he's basically so liquid that it's not really gonna be affected by the price movement of the market
Mhm.
because we are such a small, obscure, liquid stock that
Mm.
I mean the stock market's not gonna change anything.
Mhm.
Unfortunately, we did run into some competition on buying, which railed the price to about $65, where we were neither buyer nor seller. So he stopped buying at 65. What a
Mhm.
cheapskate. Very small buying orders can create price changes of this magnitude in an inactive stock, which explains the importance of not having any leakage regarding our portfolio holdings. See, I mean,
Interesting.
this is a highly illiquid stock, and small orders are changing the stock price, so he's taking a long ass time to build his position.
Yeah, you know what's awesome about this is that he's not trying to artificially inflate it. In fact, he's doing the opposite here. He's like, guys, don't let it leak out because I want it to stay cheap.
Yeah, and
It's
and
like the opposite of a SPAC.
and I think the bank is worth $50 million, and he owns 12% of the bank. I
Yeah,
mean, that's kind of like $6 million,
yeah,
and that's 20% of his portfolio. So his portfolio was probably around 15 to $20 million at that time.
mm,
Interesting.
okay,
That's a lot of money.
interesting. Yeah, yeah. 27? Is he at 27 now?
28.
28. Okay, golly, dang.
Okay, okay, okay. Where were we? So looks like the price rallied up to $65, so 51,
Hmm.
and he stopped buying because he's a cheap person and he
Yep.
likes really really cheap things. And he didn't want to disclose anything. And now the
Yeah.
fact that he's disclosing now seems like he's no longer gonna buy anymore.
Yeah.
Late in the year, we were successful in finding a special situation where we could become the largest holder at an attractive price. So we sold our block of Commonwealth, obtaining $80 per share, although the quoted market was about 20% lower at the time. Wait, what?
What? So he's saying he had it up there. He was saying, okay, it's $50 per share. I'm expecting it to go up to 250. I'm cool if it just stay if it goes at 125. And then over here, he's saying,
He found something else, a special situation, like the workout situation things. So, and this is a highly liquid market. So someone offered him, "Hey, I'll buy your stocks for $80." He was like, "Sold," because the
what?
market
Why?
price was
But
65.
his intrinsic value was 125.
This is
You
what he
would have
did.
expected
He
him.
bought things very very cheap and sold them for cheap, and then he bought other things very very cheap and sold them for cheap.
Uh,
He's he
that sounds
sold
dumb.
he bought things so cheap that he sold them where other value investors would buy them.
This sounds kind of stupid, right?
I mean, it sounds like a great business. You should have held on to it.
Yeah, that's what I'm saying.
But he
Like
bought
he should have
something.
held on.
I mean, this is what a lot of
Maybe
people
it's
do.
the the cigarette butt type of mentality still. Like, oh man, I got it at 60. Someone's giving me 80. All right, fine. Here
No,
you
but
go.
this is how he's maximized. This is how he's doing 50% in turn, returns. I
Hmm.
mean, he's trying to maximize uh differential and maximize profit per dollar
Yeah.
amount invested. So I
Yeah.
think this is kind of higher
Mm.
frequency, short term private capital gains that
Yeah.
he's dealing with.
Probably also not very Buffett-like today, for sure.
I mean,
He would
today
have
he can't.
not.
I think he still loves
Yeah.
this, but then he became too big and he couldn't do it anymore.
Yeah. Yeah.
But he loves this.
Really? Okay,
So I
buying
mean,
it cheap and
if
then
we
selling
want
it
to
a
get
little bit.
rich, I mean, this is what we should be doing.
Yeah, buy super cheap, sell
Cheap.
at a markup, and then
No,
buy
no, no, no.
more, which are even
Buy super
cheaper. Is
cheap
a
and buy and sell still at a cheap price. You're not selling when it's above intrinsic value. You're
why?
selling closer to intrinsic value, so someone else buys it from you,
Mm-hmm.
and then you buy something else that's super super cheap. That's his strategy.
Oh, I see. So he has more capital to go with, even though he could have
Yeah, he took
waited,
my profit.
gotten. Okay,
He doesn't want to wait for it to go like 129. He's like, I got my
gotcha.
profit. Let's get
Okay.
out of here.
Ugh, that sounds so dirty because you gotta pay taxes on that thing, and
I don't know.
you
Maybe he doesn't.
know,
Maybe it's been a year. I'm not sure. I am
yeah,
not sure.
maybe. Yeah, but I just mean it doesn't seem very. It's almost opposite of what you're taught in school, right? Like, I mean, if you went to the Buffett school of holding forever, it's like, hey man, if you got low funds of money, do the opposite of what I'm doing. Get some money, okay? It's super
And
cheap.
they didn't
Sell
even
it for
have.
also cheap.
Yeah, they didn't even have IRA accounts back then. So you couldn't even do it in a tax protected account.
Huh.
Maybe the
Interesting.
taxes were low. I don't know what capital gain taxes were, but maybe they were low. Okay.
Interesting. Hmm.
It is obvious that we could still be sitting with $50 stock, patiently buying in dribs and drabs. I don't understand his
I don't get
lingo.
it either.
And
Okay.
I would be quite happy with such a program, although performance relative to the market last year would have looked poor. Uh, the the year when a situation such as Commonwealth results in a realized profit is, to a great extent, fortuitous. Thus, our performance for any single year has serious limitations as a basis for estimating long term results. However, I believe that a program of investing in such undervalued, well protected securities offers the surest means of long term profits in securities. What? So he's saying we could have been sitting in that $50 stock patiently
Hmm.
buying other things, I guess, and it would have worked out. Like if he did what he would do now, it would have worked out fine. Like he could have just
Hmm.
sat on it, held it for a long time. He
Hmm.
probably would have underperformed the market in his
Hmm.
portfolio
Yep.
because he would not have any realized gains because he sold it, so he had gains, profits to
Hmm.
show for,
Hmm.
and that's how you know. That's why the year was profitable. And he's still 28. He's still not. I mean, he's Munger that says Buffett became smarter as he got
Hmm.
older. So
Yeah.
maybe he is feeling the pressure to show year-to-year returns to his partners,
Hmm.
at least to keep them happy, or maybe that's how his partnership. If he doesn't, then he has to pay them. I don't know.
Yeah. Right. Right.
So maybe he feels pressure to show year-to-year profits,
Hmm.
and that's creating a little incentive to sell great things that he could be holding.
Yeah, and also, it could also be that issue of like him not having enough cash because he maybe he has a lot of companies that he could invest in, but he's like, man, only if I had more cash. And then,
So there are two things. Yeah, I think either
yeah,
that, like he's needing to sell and have cash, and or he's just finding other incredibly cheap and amazing opportunities where he's like, well, now that's my number one conviction. So
yeah,
I gotta, just follow my formula.
yep,
Um, what else did he say? Yeah, that our performance for any single year has serious limitations. So I mean, just because we did great, you can't estimate, what long term we will do because this greatness happened from selling something.
Yeah, yeah. I kind of want to label that as like the Buffett disclosure because he's starting to say it almost every letter, right? He's like, "Hey, man, we did pretty hot this year. Next
Yep.
year, don't be expecting this." So,
And he's saying like, I mean, this program of purchasing undervalued, well protected securities. So that
hmm
means very, very limited downside.
mm,
They're cheap, low permanent downside, and offers the surest means of long term profits. I mean
mm,
that is the formula
yeah.
for riches.
hmm
Um, I might mention that the buyer of the stock at $60 can expect to do quite well over the years. However, the relative undervaluation at $80 with the intrinsic value 135 is quite different from the price of $50 with the intrinsic value 125. This kills me. And it seems to me that our capital could better be employed in situations which replaced it. Wow. And I mean,
Okay.
intrinsic. He acknowledges intrinsic value went up. When he
Yeah.
bought, it was like 50 to 125, and then now he sold at 80 when the intrinsic value is 135. I mean, he's making
So,
penny profits, and he's sellers.
so wait. So he's saying even though I'm making profits, the guy who bought it off me at $80, he's going to be making even. I mean, he's going to be making money,
He
but
he still thinks
um,
Buffett still thinks that Buffett made more money. He thinks the guy who bought it is still gonna do quite well,
yeah.
but Buffett has the energy to find other cheaper stocks, and it looks like he did.
Oh, I see. Okay, okay, okay. So 50 to 80 was enough for him to be like, I'll take whatever I can get and make better bets on finding lower
Like even more deeper value
valued,
stocks.
yeah, deeper valued stocks. Okay, okay. Jeez. Okay, I got it. Interesting.
Sounds
Okay.
like I just
Wow.
wanna be have Buffett dig these things, and I'll just buy it from him and just sit on
Y-
it. Like, why don't
Yeah.
you go and do all your stuff, and when you're ready to sell, just let me know, okay? I'll pay you twenty
Yeah.
percent premium on the market price, and I'll just buy and hold,
Yeah.
and then you
Yeah.
keep doing your work.
Yeah, yeah.
Oh,
It really does seem kind of like so. This you like, at this time you would think that. I mean, I thought especially when he was young, he was like buy forever, hold forever, that type of guy. But I'm starting to think we're seeing him like being really ambitious here,
but
right?
he's buying stuff that sounds like he's buying things that could be held forever.
Yeah,
He's just choosing not to.
because there's other players that he can invest in to make even more money.
This kind of reminds me of this Twitter guy. That he's kind of famous with new investors, Jeremy Raper, and he's the one who's like kind of was peddling Shinnikin and Namo Brook.
Mm,
You know, kind of brilliant guy who tells you about these kind of really good stocks,
hmm
ideas. I think he's a good analyst,
hmm
but then he sells out of them after like a year. Like
Interesting. Okay.
did a thorough evaluation of Shinnikin because he grew up in Japan, and Japan is the real estate spawner that Pabrai bought as a
Mm,
long term hold now,
hmm
and Jeremy Raper already sold it.
Oh,
He bought
interesting.
Mobruk, which is the Polish waste management
hmm
high moat company. That I mean I really don't understand it. I love waste management as an industry, so I was interested
mm
in that, but and then I mean he'll just probably sell it and move on to other things. So these kind of smaller, agile, smart analysts
Yeah.
kind of buy these things with very limited downside,
hmm
and as the stock, you know, starts getting higher, I mean they sell out and they find something else. Like they're
hmm
the only negative thing I find in them is the impatient nature.
Yeah.
Like just sit on
And
it, man.
the
Like yeah, like why are you
yeah.
selling it?
Yeah, but I mean, you're gonna get taxed too, right? Like, if you're gonna be that, maybe it's after a year then, right? So maybe
Yeah.
but even then, I kind of hear you. But I wonder what this Twitter guy's. like portfolio sizes? Is it um, huge? Is he a billionaire, or is he just like a
If I had to guess, he was probably between 10 and 15 million.
okay? So maybe he's doing the right thing here, similar to very Buffett-esque during 1957, right?
Yep, yep, yep.
Like it seems like he's kind of on the right path in terms of maybe making similar moves to what Buffett was doing when he was,
I agree. I agree. Or
28.
maybe less.
Yeah.
Maybe, I mean, it's definitely between 1 million and 20 million. I mean, I think that
Yeah.
may be a better.
Okay.
Um, okay. Where were we?
This new
Yeah,
situation is somewhat.
this situation is somewhat larger than Commonwealth and represents about 25% of the assets of the various partnerships.
Wow.
Okay. While the degree of undervaluation is no greater than in many other securities we own, or even than some, we are the largest stakeholder, and this has substantial advantages many times in determining the length of time required to correct the undervaluation. In this particular holding, we are virtually assured of a performance better than that of Dow Jones for the period we hold. Wow. So he let
Damn.
go of that company to buy this company where he's the main majority largest stockholder,
Mm.
and that gives him surety. So he's not so his fixation is not on will I get the money.
Hmm.
His fixation is when will I get the money.
Mm.
So he's
Yeah.
very much playing the activist investor role where he's trying to create that corporate activity that will unlock his value.
Mm. And it could be also that you know he's probably at this time looking around. He's looking around definitely for all these great um, companies, and then he finds it. But I'm trying to figure out, did he sell all of the 25% that he had to the $80
Yes,
buyer?
he exited 100%.
Oh, really?
Yep.
You kidding me? Wow. Interesting. Okay. Dang, that's
Yep.
25% of his holdings. He just exited, huh?
Yeah. And then he did
Okay.
this. Current situation. The higher the level of the market, the fewer the undervalued securities. And I am finding some difficulty in securing an adequate number of attractive investments.
Hmm.
I would prefer to increase the percentage of our assets in workouts, but these are very difficult to find on the right terms.
Mm.
To the extent possible, therefore, I'm attempting to create my own workouts by acquiring large positions in several undervalued securities. Wow.
That
Such a
is
policy
incredible.
should such a policy should lead to the fulfillment of my earlier forecast, an above average performance in a bear market. It is on this basis that I hope to be judged. If you have any questions, feel free to ask them.
Dang,
Wow.
that is incredible.
That is just pretty
So,
rough. I mean,
so
he's
yeah, he really wants voting power right now, so that he could just be like, "Look, you guys need to do this, so that my company will pop, and then we're good to go."
his Bill Ackman.
Yeah, he's an active investor.
Wow. At a small company, I mean, small cap active investor. He's trying to
Yeah,
make companies. This kind of type of investor sometimes not good for the companies.
yeah,
He's forcing them into things so he can make money and exit and profit at
yeah,
possibly expense of that company's long-term potential.
yeah.
Wow.
Incredible. Wow. So you really need to, so it's funny because you really need to have like the balls to be like, "Hey man, like I know better than what you need to do as a company.
No, 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 no,
I'm
no.
gonna tell you."
He's not saying how to run the company. He's saying you need to do this for your shareholders.
Yeah,
That like
which is active investing.
yeah, I mean the decisions Buffett makes in these scenarios for the company, they may be short-sighted. I don't know if they are, but they
Mm,
could certainly be short-sighted. The point of them are to increase stock price now so
mm.
Buffett can exit. That is the
Mm.
only purpose of his obtaining voting power.
But that seems kind of a jerk move, right? Because what you're
Exactly.
saying is like, yeah, like, hey, help me get my my kind of pop up, and then boom, I'm out of here. Peace
Yeah,
out.
and then good luck with you and your shittier business.
Yeah, but really, he's not saying that it's a shitty business. He's like, your intrinsic value is pretty high. I just don't want like
No, I
waiting.
mean it can, he can force them, a company who's sitting on, let's say, a good company like the first one who's sitting on a lot of cash to invest. He
Yeah,
can force them to give a dividend, which would,
yeah,
now the company doesn't have that cash, and now dividends been given, the share price is high, and Buffett's like, well, good luck.
yep, yep. Incredible. I love it.
Oh my god, he's like an assassin.
I know. I didn't know that he was a. I didn't know that he
Maybe
was an
that's
active
why he
investor in the
switched. Maybe that's
past.
why he's like, that's an ugly game. You don't want to do
Yeah,
that.
yeah. Yeah, but interestingly, a little tidbit. I don't know if you knew, but his kind of guru, what's his name?
Benjamin Graham.
Graham. Yeah, so Graham was actually an active investor. I don't know if you knew that.
I didn't
Where
know that.
he's
Okay.
yeah, where he actually tried. There's this famous story of him actually trying to say, "Hey, look, I know exactly what's needed for the shareholders to do good by your shareholders. Give me a seat on the board." And then they said, "No, thanks for coming all the way, but you got to get out of here." And then so he took it really personal at that time, and then bought out a lot of shares, and then boom, he really ruled that company. But I don't know specifically the name of that company, but that so
Like he
really
took over
there's
that company.
stories. He what?
Graham took over that company. Is what you're
I
saying?
don't. I think Graham did take over that company. Don't quote me on it, but
Oh,
like, but he got really mad because as a shareholder, you would think that your voice is heard, and so he goes to the shareholder meeting and he says, "Hey, man, come on, like you got to hear me out. I'm your, I hold a lot of your shares." But then they say, "Sorry, we're not even going to hear you because you don't have enough voting power. Sorry, you're just going to not even hear you out." So I think what I'm trying to say is that maybe Buffett has glimpses by talking to Graham that there's okay active investing. There's some. It's not all rosy and whatever, but there's some times where you just got to do it. So he's exposed to it. Yeah,
well,
very interesting.
this is. But what I like about Munger style investing is that how passive it is. I
Yeah.
mean, you just find the perfect business, you get a good size of it, and then you forget about it,
Yeah.
and you
Yeah.
let the compound machine work.
Yeah.
You just kind of keep a
So
loose
true.
eye on it. The things are kind of progressing. I mean, that's what's that's what motivates me.
Yeah.
I don't want to, like this seems like
Yeah.
a full time job. You gotta
Yeah.
figure out what it is, and then you gotta figure out how to unlock the value, and then I
Hmm.
bet it'll make you incredibly rich.
Yeah.
Just
Yeah.
like a video game, I guess, in a sense that you're just searching for treasure.
Yeah. Yeah. But I really don't know how much time, probably a lot of time, knowing Bill Ackman's story. It probably takes a crap ton of time to be like, hey, I got to go to these board meetings, convince this guy, that guy. Just like, instead, just find one. Intrinsic value is very high. Okay, just invest in it, and then boom, you're
And
done.
a lot of these people, I mean, a lot of investors that do active investing,
Mm.
well, they're people like Ackman and Carl Icahn. I think they're publicly active investors.
Yeah.
But sometimes some non-active investors, value investors, get forced into a situation where they have to become active investors to kind of fight for their right. If like the management is doing something incredibly stupid or making a personal deal where like the original family gets special shares, and like that's what like Norbert Liu did
Yeah.
with the soda company in Argentina. Like he was forced into active investor to be respected as a shareholder.
Mm.
He still made money, but I mean it was not worth it. Same
Yeah.
thing with like Buffett and Solomon. I mean, Buffett ended up making money, but it was like that was
Yeah.
definitely
Hell.
not worth it.
Yeah, 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 definitely help. Yeah, for sure. So thanks for kind of tuning in. Very exciting.
Wow. This was
1958.
a lot more interesting than I thought. Like people don't mention these letters, so they must be crap. But I'm like,
Yeah,
I'm learning this whole other side of Buffett.
Yeah, and keep in mind this is still private, so this is like before shareholders and stuff. Look how active he is. He's just
Yeah,
this kid. Imagine going to these huge boardroom meetings. You got like 60-year-olds and being like, "Hey, what the hell? What's this kid talking about?"
it's incredible, incredible. Wow.
Yeah, genius.
All right, till next
Alrighty,
time.
see you next time.
Bye bye.